We now have a motion to reconvene into open session, moved by Councillor James, seconded by Councillor Erb. Please, all in favor? And that is carried. Thank you. I would now pass it over to Mr. Dyer, Commissioner of Corporate Services and Chief Financial Officer, to speak to the 2023 year-end audit plan report.
Yes, thank you. Thank you to the Chair. We have a brief report for Audit Committee's consideration today with respect to our year-end work plan. This is an annual report that comes before Audit Committee that will describe the process that will be undertaken by regional staff and by our audit partners, KPMG, to prepare the 2023 year-end audited financial statements. So I'll have two speakers today. The first will be Tricia Alpaugh. Tricia is our Manager of Treasury Services and Corporate Accounting, and she'll walk you briefly through the staff report that's available for your review today. It's an information report. No specific decisions are required. And then we have representatives here from KPMG who will walk you through their planned audit work, both from an interim perspective and in terms of the year-end audit that will take place in March. And so I'll turn it over to Tricia to start us. Thank you.
Good afternoon to the Chair and members of Audit Committee. We are pleased to be presenting the year-end audit plan for the consolidated financial statements of the region, as well as the audited financial statements of the Sinking Fund and Sunnyside Trust Fund. The Municipal Act requires Ontario municipalities to appoint an auditor and to prepare and publish audited financial statements annually. KPMG has been appointed as the region's auditor, and they are here to speak in more detail about their audit plan. KPMG will be performing 16 separate audits as set out in Appendix A of the report, and the financial statements will be prepared in accordance with Public Sector Accounting Board standards, which include 4 new standards for the fiscal year 2023 related to asset retirement obligations and financial instruments. Preparing the region's financial statements requires dedication and diligence of many regional employees. Treasury Services coordinates the year-end process to ensure timely completion of the financial statements. Currently, KPMG is conducting preliminary audit work, and the annual audit will occur in March. Audited financial statements will be presented to Audit Committee and then to Region Council for approval in April. Staff are continually looking for opportunities to improve the timeliness of our year-end, reporting to Audit Committee and Council and ultimately to the residents and taxpayers of the region. This is despite the fact that already we report our results sooner than most municipalities. Our goal is to eventually report by the end of Q1 of the following year.
Yes, so thank you, Tricia. I'll now introduce representatives from KPMG. With us today, we have Matthew Beddick and Courtney Cheel, who will speak to the work that they intend to do over the course of the audit.
Thank you, Craig, and members of the committee. We have a... Speak into the microphone, please. Yeah? It's green? Do I need to be closer? And we have a presentation. Will it be put on screen? Okay, so we'll take a few minutes to walk through. As we go through, if there are questions, we can take them at that time, but we'll have a few minutes at the end as well. So if we could advance 3 or 4 slides. Okay, sure. So one more, please. So an audit of financial statements, continues to be technology enabled. As you can well imagine, there are, thousands of transactions that the region undertakes each year, and tens of thousands of data elements within the financial statements. And so we continue to evolve and use a variety of technology tools in performing our work. We've described some of them here, but at a high level, we're looking at tools that will perform more robust risk assessment, helping to identify areas of anomaly or high risk that require further investigation, improve efficiencies and the quality of our testing. So for example, on the third box there on the right, we have something called the data snipper, which is a tool that we use as an optical character recognition technology, where we actually can take third-party documents and compare those to amounts that are recorded within the ledger. Instead of having that be a manual process, we can have some of the machine do it for us, which allows us to spend more time on areas of greater risk and judgment. And then we also use a tool called IDEA, again, which is a data analysis tool. It allows us to boil down large amounts of data into usable bytes. So again, this improves the efficiency, it improves the timeliness of the audit, but it also improves the quality. I could advance 2 more slides. So we have discussed with this committee and are required under the standards to report to committee about our planned materiality for the audit. So materiality is 2 things. The first is it sets the level of scoping and the extent of testing that we perform, and it also is the benchmark for which we would evaluate if there are any uncorrected amounts in the financial statements and still give a clean audit opinion. We set materiality each year based on a benchmark. Given the type of organization you are, we typically use the total revenue benchmark, which is consistent with other municipalities across the province. We've set materiality at $30 million, which is approximately 2% of revenues. The standards require that we set that materiality on a benchmark of 0.5% to 3%. So we're kind of in the middle of that, which recognizes that we don't believe that there are significant areas that require special consideration, but also we don't want to set a materiality level that's too high and perhaps not meet the ultimate needs of the users. We often get questions around, that's a big number, $30 million. Certainly the region manages its affairs to a much greater degree of precision than that. But we look at it from the perspective of the financial statements where you've got sort of 1.4, 1.5 billion in revenues. If those revenues were sort of higher or lower by $30 million, would somebody looking at the financial statements of the region come to a different conclusion as to the size and scope of your operations? And I think when we take it into that context, it makes a little bit more sense. Next slide, please. In the preparation of the financial statements, the region uses a handful of specialists in determining amounts that are complex or require specialized knowledge to obtain. The first being the post-employment benefits. So these are WSIB and other health and dental benefits that are provided to people when they're not working. These calculations require the expertise of an actuary, and the region has hired a third-party actuary called School Board Cooperative Inc. to do those calculations. We work with School Board Cooperative Inc. to assess what's been performed, looking at the assumptions that have been made, and making sure that all the standards have been followed. The next 2 areas really deal with the asset retirement obligation that Tricia mentioned, as well as the calculation for the liability for the landfill. And here, the region uses its own internal engineering specialists, as well as third-party consulting engineers. And again, we work with those specialists to make sure we understand that the work that they're doing is appropriate. On the next slide, we just provide some updates here. We're talking about the new accounting standards, which Tricia already mentioned, and then some new audit standards that we've implemented at this time. But those the audit standards shouldn't have a significant impact. The accounting standards, specifically the asset retirement obligation, will result in a significant new liability residing on the statement of financial position for the region. The next slide outlines the deliverables, which is consistent, again, with the staff report on the audits that we perform. Courtney?
Thanks, Matt. So on the next slide, if you don't mind, this is just a summary of our risk assessment and our risks. If you go to the next slide, I will go into more detail. So the first is a fraud risk relating to management override of controls. And this is consistent each year, we have it. And what it is even if organization has really strong controls like the region does, management can always override these controls. We do believe that this risk is low, but we do have to perform procedures over this. Our main procedures would be to look at manual journal entries and ensure that they were authorized and approved appropriately. On the next slide, this is other risks of material misstatements, so other areas of focus for us. The first is post-employment benefits. And the reason this is a focus is because there is significant estimation uncertainty within the liability, as well as the accounting is complex. Our audit procedures to address this risk are relying on management's actuarial specialists, school board cooperative incorporated, and we will be confirming the year-end balances with them. We'll also assess the reasonableness of the assumptions used and test the reasonableness of the underlying data. The next area of focus is the obligatory reserve fund revenue and deferred revenue. And this is an area of focus because the expenditures used to recognize the revenue have some judgment within it because they have to be growth related in nature. Our audit procedures surrounding this risk will be to perform testing over the approval of development charge funding allocation to the growth related projects, perform substantive testing over amounts being recognized as revenue. We'll also confirm funding received by the lower tier municipalities, and we'll obtain a sample of costs that relate to development charge revenue to ensure that they are appropriate and allocated to the correct project. The next area of focus is the asset retirement obligation. And as Matt mentioned, this is a new accounting standard this year. We also have this as an area of focus because there is estimation uncertainty within the obligation. This year, our procedures surrounding this risk would be assessing management's accounting position over the new standard and ensuring it's appropriate and in compliance with public sector accounting standards. We will also inspect the journal entries to record the initial obligation as at the transition date. We will obtain a sample of obligations and ensure the accuracy and existence of the obligation is appropriate. And we'll also look at some assets that do not have an obligation attached to them and ensure the completeness of the overall obligation is appropriate. The last area of focus is tangible capital assets, and this is an area of focus purely on the size of the balance at year end. As of 2022, this was $3.8 billion. Our procedure surrounding this is we'll look at the activity during the year, so we will look at any additions or disposals and perform a substantive sample over these to ensure the existence and accuracy of them are appropriate. So on the next slide is our key milestones and deliverables. So as of today, we have done our planning and risk assessment, and we've also done our first week of interim work. Next week, we'll be doing our second week, and then in March, starting March 11th, we'll be doing our year-end field work and presenting to you in April. The remaining parts of our presentation are appendices, and this is just for your information, so I won't go into detail about these, but if anyone has any questions, we can answer those now.
Sorry, Mr. Dyer. Okay. So I guess it's back to me, isn't it? Yeah, sorry, we have no questions at this moment. So colleagues, questions? Chair Redmond.
Thank you. I'm not fast enough off the draw. I may have not been listening intently enough, but on page 13, when you talk about confirm funding received by area municipalities, can you give me an example? I'm just looking for an illustration of what that would encompass.
So these would be development charges that the lower tier municipalities collect on your behalf from developers.
Okay, thank you.
I don't see any other questions as of now, so just trying to think where we are here. Are we 7.1? Yeah, so I will ask Mr. Dyer to move to our next presentation, 7.1, Payment Card Industry Data Security Standards Compliance presentation. Thank you again, folks, for coming in. I'll now pass it back over to Mr. Dyer.
Thank you to the chair. Another, what seems to be turning into an annual update for Audit Committee, which I think is quite appropriate. We have with us today Terry Yancey, our Director of Information Technology Services, and Tricia Alpa as well, who are just going to walk committee through a brief presentation on our continued efforts that we're making as an organization to ensure we remain compliant with something called PCI DSS, Payment Card Industry Data Security Standards. And this relates to the efforts that we need to, and actions that we need to take in order to ensure that we meet all the criteria of major credit card companies with respect to electronic transactions. And so with that, I'll turn it over to Terry and Tricia, who will explain to committee what PCI DSS is and our efforts to remain in compliance. Thank you.
Terry and I are here today to provide an update on the region's PCI DSS compliance. That's the acronym for Payment Card Industry Data Security Standards, to provide an overview of what this is, how it impacts the region, and our path forward. If I can get you to advance a couple of slides there. One more. Thank you. Here is a snapshot of a number of entities that all have something in common. They are all retailers, and they have all been victims of a credit card breach. The region is also a retailer, and we fortunately are not on this list thanks to the efforts of many staff throughout the region in achieving and maintaining PCI DSS compliance. If you can go to the next slide. PCI DSS is an externally driven mandate from the payment brands such as Visa and MasterCard that are imposed on all merchants accepting credit cards for payment of goods or services. These rules are designed to prevent credit card data breaches. The region accepts credit cards for payment for various goods and services through in-person point-of-sale machines, online, over the telephone, and self-serve kiosks. PCI DSS compliance must be validated annually. Maintaining compliance requires ongoing security of the region's systems and networks, continuous education of staff, and collaboration with region departments and the Waterloo Region Police Services on solutions that balance operational ease, service excellence, and meeting the standards. Ongoing compliance is supported through improved IT security measures, as well as clearly defined processes for all impacted employees. Any new project or initiative that involves payment cards is reviewed to ensure all PCI DSS requirements are met and risks to cardholders and the region are minimized. In 2024, a new version of the standards come into effect, and staff are working towards compliance to those standards for the region's next attestation of compliance in June of 2024. Can we go to the next slide? Thank you. Residents are seeking friendly, resilient, secure online and self-serve options, including for payment. This is a key piece in the region's digital transformation. We continue to see growth each year across many divisions accepting credit card payments, including transit, housing, waste management, POA, and in the upcoming automated speed enforcement program. Next slide. This graph shows the fast upward growth trends of credit card transactions over the last 5 years. In 2023, at the end of October, the region had received 569,000 payments by credit card. Next slide. And this graph shows the fast upward growth trends of the revenue processed via credit cards. At the end of October 2023, the region had received over 26 million through credit card payments just in 2023. And I'll now hand it over to Terry, who will speak more on the ITS security pieces.
Thank you, Tricia, and through the chair, I'm happy to be here this morning, committee, to walk through some of the technology components. This slide's really trying to explain that securing all regional information and data is a vital mandate of ITS. And in this particular case, we follow PCI DSS standards in addition to our regular security standards to protect cardholder data, the same as we might protect personnel data, asset data, or other types of data. Next slide, please. And so I think this slide is perhaps self-explanatory, but it tries to highlight the impact of a cardholder data breach. Perhaps one of the most significant is the loss of confidence and the reputation to the region. Significant legal costs, penalties, reissuing payment cards that have been breached becomes a responsibility of the region if we're found to be responsible. And then a much higher cost of compliance after a breach. And as Tricia mentioned off the top, fortunately, we're not in this position, but the impacts of a cardholder data breach are significant. So the efforts we're making are have a significant return on investment. So next page, please. And again, we're following, as Tricia said, in this program, a number of compliance actions around governance procedures that we follow for staff, significant efforts in communication and training of staff involved in cardholder data. And in fact, this is a subset of the efforts we're taking in communication and training for all regional staff to ensure security. And then any remediation, if we find a known gap or an emerging gap in the systems that we're employing and using, we have remediation plans to close those gaps. And again, audits on the payment processing systems that we have in place today across many divisions that Tricia shared. Next slide. And so in summary, it is an ongoing contractual requirement if we're going to accept credit card payments, and the public is demanding we do so more and more to remain compliant with PCI DSS. It's an annual process, a significant staff effort in terms of IT, finance, and individual roles accepting credit cards. I mentioned it's a subset of the broad and continuous effort that IT security is putting into all systems across the region. And it's the collaboration really with IT and finance that we work with every individual division looking to offer payment cards or offer payment via credit card in exchange for their services on a continuous basis. And as Tricia again mentioned, the standard is continually updating, and there's a major new version of PCI DSS 4.0 coming out, and now we're working towards that as a target for compliance in June. That's the end of our presentation. We're both happy to take any questions the committee might have.
Sure. Before that, I know Mr. Dyer would like to add something into that.
Yeah, just one additional comment to build on the slide that was that Tricia showed with respect to the transaction volumes, which you've seen have been increasing significantly. And you think about the conversations that we've been having through budget process, these numbers have nowhere to go but up. And if you think of a couple of specific items, one is transit ridership. Right, so significant increase in transit ridership is going to mean a significant increase in the number of transactions that we process. And then secondly, our venture into automated speed enforcement and the payments, the fine payments that will come out of that will also drive volumes up. And my point in mentioning these is that, and Terry and Trish, I don't mean to put you on the spot, but there are thresholds of transaction volumes that require more robust actions and efforts and security to be put in place. And so in addition to, we're obviously, cognizant of the transaction volumes we're trying to meet right now, but as transit service expands, as transit ridership increases, and as ASE rolls out, we have to be mindful of when we expect to hit the next threshold and what that elevated level of effort is going to look like. I'm not sure, Terry or Tricia, if there's anything you want to add to that.
I'm going to put Tricia on the spot. I think the next threshold is 1 million transactions per year. Is that correct?
Yes, you are correct.
And as Craig said, at which point then there'll be stricter and more robust requirements. And then I think the transaction volume after that is 10 million. And that's when you obviously get into significant retailers who are doing hundreds of thousands of transactions a day.
Councillor James.
Yeah, thank you, through you, Chair Harris. Just want to say thank you for the work you and your team are doing in regards to this, and especially with the number of just protecting people's information and the security around that. It is a lot of work, and becoming increasingly more and more of a necessity to keep up and to maintain standards, et cetera. So thank you.
Well, thank you for that presentation. Oh, Councillor Erb, sorry.
So who gets the air miles for the 26 million? but I do have a question. So what benefit would the region get for having that kind of dollar value used on credit cards? Is there some kind of a lesser service fee charge, or is there none?
Through the chair, the region has a contract with Chase Payment Tech Services as a merchant bank, and a merchant bank differentiating from a regular bank that you might do your personal banking through is a bank that processes, is that intermediary between merchants and the payment brands like Visa and MasterCard. And the region at each contract renewal goes through a negotiation process on fees, and certainly as volume increases, the piece of the fees that are associated with that contract, obviously there's economies of scale, but there are limitations. Much of the fees are set by the payment brands, who really don't negotiate on the volume of transactions. It's more driven by, it's an expectation out there that people can pay using credit cards now.
Okay. And just another one, if I may, and this is sort of, this just happened to me this morning, and I don't buy very much stuff online at all, but I had to give my credit card number to somebody, to a company, and they said, just a minute, I'm going to put you on a secure line, and then you punch your credit card number into the system. I've never been asked to do that before. Is that something common now, or that would happen? And I was hesitant about doing it, but it was anyway.
Through the chair, actually, that's really good news. I would say that if you are dealing with a company who isn't doing such things, I think that's the time when you would want to have more fear. Part of the PCI DSS standards are to have these very secure channels, and something that we went through in achieving our PCI compliance is we had to come up with, for over the phone payments and for online payments, we had to have devices that are completely locked down as a secure channel for those kinds of payments. And we have to redirect as well, because then there is no way that a hacker type individual can get in and get at that information.
So that would be a practice that the region does then? If somebody,
Yes.
Okay, good.
Yes.
Chair Redmond.
Thank you, Chair Harris. I was just going to make the observation that for many people, this seems invisible, and yet they're really depending on that kind of adherence to a protocol. We've all heard about ransomware, and it strikes me that the public want this kind of interface with the region, so this is just going to continue to grow. So I guess just as we grapple with the budget, it's a cautionary tale that investment in these issues are exactly the kind of service that is going to be expected by our public as we go forward.
Colleagues, I don't see any other questions, so thank you for that presentation. Nothing else from our CFO, so that being said, is there any other business? Seeing none, the next meeting is to be determined. So we will now start our vote to adjourn the audit committee meeting, moved by Chair Redmond, seconded by Councillor James. Please use yes or no. And that is carried, everybody. This meeting is adjourned at 10:51.